Good day, fellow investors. Ray Dalio just came out on LinkedIn, subscribed to his newsletter discussing how the risks of a US-China military war have declined and a new type of war has begun. We have Xi and Biden discussed this week, so positives there. And the key is that Ray Dalio lowered the risk of a real war between the US and China in his analysis over the next 10 years. Anything can happen, but it is good that the risk is being lowered, which also changes the perspective for us investors, especially about China. In short, of course, it is in no one's interest to have a war. The Chinese are taking the strategy of the art of war, hide your strength, bide your time, and to quote Ray Dalio, this type of war is fought by using deception, by having the other side expend resources while saving one's own, and by using the opponent's own circumstances to weaken them and take advantage of their weaknesses. And further, the key there is how you manage your own financials, economics, technological and societal strengths relative to the opposition is more important than how well one builds up and uses one military strengths, etc., compared to the other. So there will always be these issues between the two leading powers in the world. Politicians need votes, so their focus will first be on votes, on strengthening their own position, and as the Romans did, divide et impera, put your focus or deception on something that is out there, make some people fight around the world, solve that, instead of focusing on the real issues that are always there. But Ray Dalio also mentions the 5 driving forces, and we as investors have to understand how politicians play a game of deception and how that impacts us and our capital allocation. Because that is not discussed as much. This is just from Bloomberg this week. Inflation data looks promising. That's 1 month and everything is great. US government shutdown, that happens, discussions on that every year, and remote work, and that is the Bloomberg's, let's say, highlights for a day, but that is all short term. And stocks jumped on short term things. Policymakers, of course, some say yes, some say no. On inflation, for now, it seems that the Fed will have to lower interest rates. That will benefit stocks. Stocks go up. But that is all short term, and politicians and the news and the media play this game with you because it is about the short term, not about the long term. The long term hurts, nobody wants to talk about it, but that's why you have me here. We just discussed the long-term budget outlook in a video. Watch that if you haven't. And the shifting focus is something very important to understand. Do you remember 2017, September, and earlier in that decade, what was the most researched thing? Was North Korea. There was missiles, war, whatever. And now we are at 4% of that peak interest. Nobody has talked about North Korea for years now, but at that moment in time, investors were scared, stocks were going down, everything was so whoa, North Korea. Now nobody cares about North Korea. But there are these forces in the long term that really impact the way we live and the risk and reward of our investing. Ray Dalio touches on them, but it's always good to remind ourselves where we are in that process. The 5 forces: the debt money economic force, internal conflicts that might lead to populism. It is already leading. External conflict, acts of nature, and of course technology. Now, with the debt fundamentals, we just discussed this by looking at all the fundamental data from the JPM quarterly market overview, the guide to markets. Check that video for the fundamentals, the debt, the valuations on the market, and practically the core information of the current situation. And the eternal issue there is sacrificing the now for better tomorrow. which we as humans are not very keen on. We like to sacrifice the future for a better now, and therefore the future looks scarier and scarier. We have already discussed external conflict, China, focus there, that will always be there, internal conflicts, populism, you never know who will win the elections. We have had Trump, and everyone is trying to go after those votes. See how that works in your country. I know that deficits are going higher. Then we have something that very few think about, but acts of nature can really destabilize things. We had the pandemic, and then there is always potential for an eruption of a big volcano somewhere, also in Italy, that would completely disrupt European way of life for a while, planes, also people living here around Napoli. So that's also something that can happen and can have a huge impact on our way of living. Hopefully it will not happen soon, but it's always something there. And then we also have technology. With the Xi Biden discussion, that was interesting, soybeans, imports, chips, etc. But what happens when you put on sanctions and you prohibit people from buying your own? Well, they develop their own chips, and Huawei's breakthrough chip poses a threat because they now can have 5G without, or they have stolen US tech or something like that. And there is always, okay, we can put pressure on China to protect the industry at home or something like that. But when you put those sanctions, those work in the short term, what do people on the other side do? They find other ways to get to solve the problems they have. And when you incentivize others to find other ways, over the long term, they don't need you anymore. That's what often happens. So it's never straightforward. You do this, maybe you have this benefit now, that detriment later. And therefore, it's very hard to get the correct picture from the news because the news is focused on the short term. Also, discussing recession 2024, that's a topic that now no one discussed. A year ago, it was all about recession coming in 2023. It didn't happen. We explained that it didn't happen because the government borrowed 1.4 trillion to invest. The government is 17% of government spending. That is 25% of it is borrowed. Thus, the government increased the GDP by 5%. Without the borrowing, we would have a minus 2% or something decline in economic activity. That is why we didn't have a recession in 2023, but we might see one in 2024. That might be the topic of January's news. The fundamentals are there. Nobody can predict, and it's crazy to discuss this, but it's always good to look at the fundamentals and be ready for anything. Now, back to investing. When will Chinese stocks jump? If we look at the fundamentals, Chinese stocks are relatively cheap, also absolutely cheap. With positive news, the long term might be better. So when you're thinking about portfolio exposure, well, now it's likely one of the best times to check your exposure and see how much of that fits you. Of course, nobody knows when those stocks will jump. Maybe we'll have a 50% in a year. Maybe nothing will happen for 3 years and then jump, but that is investing. Structuring a portfolio and seeing how that goes. I like to look at what Ray Dalio is looking at. He goes to China, he can smell what's going on, and lower rate of war or a different war, negotiations, etc. is something that feels better to know, not that direct, I'm going to Nancy Pelosi, Taiwan, or something like that, which is already a calmer situation. And maybe we'll have to deal with other things like a recession in the Western world. Of course, that will affect China too, so stocks can go cheaper from here. But investing is about finding the right exposure in line to your portfolio. I know we discussed a lot, nothing structural except for the fundamentals that you need to watch the other videos and then see how the risk and reward fit your portfolio. Thanks for watching, I'll see you in the next video.